Hello guys, my name is David. I want to give another explanation based on my previous video. I have series of questions from our clients, from our students. Some are asking why prop, why this. So that was why I said I need to make another video and to be able to explain a bit further. One thing is he's one thing going for prop firm, and his other thing why you need to understand why you should go for prop firm and why you should not go for prop firm. Now, so just as I explained in my last class, I was able to tell you that there are different type of prop firm. We have Cortana, we have FTMO. There are prop firms they are globally. I mean, we have different prop firms that you can actually use. But for this section, I want to be able to explain some other parts. Why prop firm? Like why are you going for prop firm? One of the reasons why I feel traders go for prop firm because you are actually risking you're only taking a risk with a smaller capital. The purchase fee, I mean, the what I mean by you're only taking a risk with a smaller capital. So you can, let me give you an example now. You are going for Cortana. Let's say you're going for an account of $139. Now, an account of 10K that goes for $139. So which means you are only going to lose $139. So let's imagine you have 500, you have $4,000, and you don't want to lose all this money. So let's imagine you're going for an account of 10K. You are only going to lose this amount that you're using to buy. So let's say you're going for 25K. On an account of 25K, also you're also going to lose just this is the maximum amount you can lose. So if you go against the restriction that was given to you, you're actually going to blow the account. I mean, you are losing the account. Now, the second thing is your loss is fixed. Now, what do I mean by your loss is fixed? You won't lose beyond the amount you are actually using to get the account. That is just the other part you need to understand. So why, when you're going for a proper account, now let me give an example. See, let's say you have $1,000 that you're using to trade. When you make a loss of 500, that loss is gone. You are not going to get it back, and any loss you make is a permanent loss. But let's imagine now you are going for a prop account of 25K. You know your loss is fixed. You can't lose beyond the amount you actually use to purchase the account. The third aspect means higher funds. Higher funds. What I mean by higher funds, it means that you have access to higher capital. So somebody trading with $100 and somebody trading with 500, you can't earn the same. What I mean by this, let's look at this now. This account of $10,000, you know, this account goes for 139. But the drawdown on this account is 5%, which means 5% of 10K, which is just 500. So which means the company is actually giving you $500 to trade. So you can imagine you trading with 139 and you trading with 500. You on 500, you'll be able to open higher lot as you like. So, and one thing you also need to consider is this maximum daily loss is actually the amount that they are giving you on every account. On 25K, the maximum daily loss is 1,250. So on 200K, the maximum daily loss is $10,000. So all these are what you actually need to understand when it comes to you using prop firm. So when I mean by you have access, so when you have access to higher capitals, you know, the more the capital you have is the more trade you can open. You can open higher lot size, this and this, and you'll be able to make more money. The other aspect is flexible schedule. You know, why trading with prop firm, you can trade anytime, any day. There's no rush, there's no this. So it gives you a flexible mode on how you want to trade, and you can be able to place a withdrawal conveniently. And the other aspect about this is about risk management. What I mean by risk management, you know, you are being given a drawdown limit. Let me give an example now. For this one again, now you have been given a drawdown limit, which means they are telling you that you can't lose more than 10K on this account. Now, you knowing that you can't lose more than 10K on this account, which means you will not want to make a loss that will be higher than this 10K. So once you make a loss higher than 10K, you have once you make a loss higher than 10K, you've lost the account. So which means that it gives you a kind of risk management whereby you want to test your risk management and make sure that you actually don't lose your account. So on 25K, imagine you have been given 1,250. So you make sure that you don't make a loss that is higher than 1,250, because once you make that loss, you violated the policy of the prop firm, and they will take the account from you immediately. So one other thing you also need to know is about profit split. One thing is, as a trader, when you have access to higher capital, those companies too, they also share profit with you, just to make sure that you are more profitable. So this means that you will receive a portion of the profit that you generate. So it's not as if because they give you access to capital, you won't get paid, or you don't have any access to the profit you're making. No, on every profit you're making, you're actually going to be sharing it with the company. Now, the other the last aspect I'm having here is just psychological benefit. Trading with someone else's capital can also have a psychological benefit. It's not your money. So your own assumption is this money is not mine. It's not as if it's mine. So if whatever happens, you let it go. So you have this mentality that you are using just more money to trade with a big capital, and this money doesn't belong to you. So you have this psychology. You can't compare when you're having your own $10,000 account to trade and when you are using a proper account. No, on $10,000 account, let's say you're having a drawdown of 5,000, you'll be afraid. You will be having this method, this feature, this and this, and you. But on a proper account, you still at peace because you know the money is not yours, and whatever happens, you are only going to lose the money you used to buy the account. So why we know about the benefit? So let's also go know some dangers. Dangers is inability to pass the evaluation. One aspect is, we have many prop firms. Let me give an example. FTMO. FTMO has been one of the oldest prop firm we have so far. I mean, is one of the oldest, one of the reliable prop firm that everybody goes for. But to pass their challenge is very, very hard. They don't allow HFT, and you need to be able to pass it. You need consistency. You must be consistent with what you do. So that's why traders opt in for other prop firm that allows HFT, that they will be able to pass the challenge very, very fast and very, very easy. The other aspect is greed. Because you have access to higher capital, you now you not start trading. You want to be using higher loss to make more money, to make more profit. And don't forget that market is always there. No matter how you trade, no matter how the profit you make, the market will still always be there. So because you're having higher access to higher capital, so you might want to start leveraging, start opening trade that you are not supposed to open. So which means if you don't have access, if you can't curb your greed, you can actually lose your account. The other aspect is ingenuity of the prop firm. Not all prop firms are genuine. I need to make this clear to you. I mean, as we are saying day by day, many firms are coming up that they're offering you prop firms. Not all prop firms are genuine. For you to be able to spot the one that are genuine, read their terms and conditions. And if what they say, I mean, is good and is something you can work with, you are fine. So, but to me, FTMO is good. We have we have other prop firms as well that you can also go for. But always do your research. Don't just based on what people said. Do your own research too as well. One other thing is change of policy. What works today might not work tomorrow. The prop firm might say they're having these and these challenges, or they want to change this, they want to change that. So everything now depends on you. You can say that a prop firm now that allows HFT today might not allow HFT tomorrow. So all these things are part of the policy of the prop firm, which might be quite easier and which might be quite hard for you to pass. And also the other aspect is government policy. The policy of the government can also affect a prop firm. I think there's a prop firm that closed down because of government policy. So that is just one of those dangers of prop firm. Now I want to give you some yardstick about prop firm. And one thing is, if you don't see prop firm as a long-term investment, you will not actually benefit it much more. You need to be able to think long when you're going for a prop firm, because it's not a get rich quick scheme. Now I want to do a comparison for you. I'm doing a comparison of on $1,000 real account and 200K funded account. Now let's do this analysis together and let's see which one do you think will be much more beneficial, between these two accounts. So I said now, on the 200K funded account, that account has a 5% drawdown limit, which means you're actually giving $10,000 to trade. Now let's just go back to Cardano. Let me just go straight like this. Now on this account, now you are giving 5%, which means you are giving $10,000 to trade. Once you lose $10,000, this money is gone. Now imagine you have $100. So imagine you have $1,000. Let me open my calculator for you so that you can see. Imagine you have $1,000 and you are targeting just 5% in a month. Imagine, I mean, for every 21 days, you are going to target just 5% of your capital every day. Now compare it with when you are having 10,000 and you are targeting just 5%. So you can see that there's levels to these games. So you can either say, okay, you want to go with your real account or you want to go with a prop account. Now imagine that the first month, the prop account, they will split this money with you because they will give you 250. You also are going to take 250. So you can compare your profit level. Which one do you think is actually going to pay you more? On your $1,000 account, do you have limit of lot size? You can't use 0.10 or 0.50 or 1 lot, 2 lot, 5 lots on your $1,000 account. You can't use all those high lot size. So that is why I try and build up this little bit so that you can look into it. So on the $10,000 accounts, on the 200K account, which means you're having $10,000 to trade with. So the maximum loss is just $10,000. So let's imagine that on a normal daily trade, on your $1,000 account, you are using 0.01, but on your 10K, you are going to use 0.10 because you have access to a higher capital. Now let's do it this way. January, you make 50. Let's assume you are making the same profit from January, February, March, April, May, June, July to December. You are going to make an average of $600. So which means you're making a profit margin of 60%, just 60%. So but if we are to look at what we have here now, imagine you using that same $1,000 to get a prop account. Now how Cortana works. On your first month, you are paying, I mean, the profit sharing is 50-50. Second month is 70-30. Third month is 80-20. Fourth month is 90-20. So you can imagine on first month you are targeting just 5%. I'm saying, the account is 200K, but because the donor limit is 10K, so we are placing a demand on that 10K that we don't want to lose that 10K. So we are assuming that we are trading with just this $10,000 account. So you can see with what I have here that let's assume you are making $500 from January to December like this. So on first month you get 250. On second month you get 350. On third month you get 400. By the time you've gotten your first and second and third, you've gotten back the initial money you used to get your prop firm, your evaluation, you've gotten everything back, and you still have the account with you to continue to trade. So on the fifth month, you get to see 450, 500, 500, 500. Now at the end of the year, if you do your summation, let's say your capital, when you move your capital, you've made like 400% of that capital. You've made like 400%, unlike when on your normal account you've made just 60% in 1 year. But on the live funded account, you've made about 400 accounts. So that is just the way it is. And one thing about life is you need to take risk. Life is all about taking risks. You can see this is another account that we just started, I mean, just few days straight, and we've been able to hit the withdrawal limit. I mean, the minimum withdrawal for Cortana is just $100. So which means any amount from $100, the company will pay you. But the company is not going to pay you until you reach 21 days. You can see, I want to place a withdrawal number on this account, but they say this person needs to wait for the next 16 days. So all these are part of the policy that all prop firm has. There are different policy on different prop firms, so they don't have the same policy. This is another account on Quantec trading. This is like another account on Quantec trading. So all what I'm trying to say is You actually need to build your interest, and is no one needs to force you to do what you need to do, and be open to learn, because on this journey of forex there is a lot of things you can actually do, and there's a lot of things you can actually learn. So I'm only here to give you just a few advice and to let you consider if you want to go for prop firm, or if you want to go for a live, I mean, if you want to go with your normal USD account. So that is just what I'm here to say. So thank you so much, and thank you everyone for liking the previous video. I will be willing to do more and more and to guide you on what to do and what not to do. Thank you. God bless you.